Buying your first home? Avoid costly mistakes. In the next minutes, get the essentials to save money, qualify faster, and close with confidence. Ready? Let's begin. Hello and welcome. I'm so glad you're here. Quick heads up, stay to the end for Massachusetts first-time homebuyer resources. Key tip, maintain stable employment. Lenders like at least 2 years of consistent income. Changing employers is okay if you stay in the same field and avoid gaps. Buying your first home is a big decision, and it can feel overwhelming. My goal is to walk you through the process, step by step. Think of this as your roadmap, from getting your finances ready to holding the keys to your new front door. This channel is about empowering you with the knowledge to make the best decisions. And if you're new here, consider liking the video and subscribing for simple, clear real estate insights. So, let's get started. Let's walk through a quick roadmap of your home buying journey. First, we'll prepare your finances and get you pre-approved. Then, we'll dive into the home search across Massachusetts, Boston, Worcester, and Springfield, and how to make a strong offer. We'll cover inspections, appraisals, and finally, closing day, when the home officially becomes yours. By the end, you'll be ready to buy with confidence. The first step to buying a home is simple: save. Tip 1. Save your down payment. The more you put down, the less you borrow. Tip 2. 20% is not required. PMI, private mortgage insurance, protects the lender when you put less than 20% down. FHA loans can be as low as 3.5%. Tip 3. Plan for closing costs, typically 2 to 5% of the price. These cover the appraisal, title insurance, attorney fees, and loan origination. Tip 4. A smaller down payment usually means a higher monthly payment. Find the balance that fits your budget. Tip 5. Build an emergency fund. 3 to 6 months of living expenses. Homeownership brings surprises. A water heater or roof repair should not become credit card debt. Keep a cushion so surprises do not derail your plan. Tip 6. Keep cash reserves. Do not drain every dollar to close. Summary: save for your down payment, add closing costs, and keep an emergency fund. Preparation makes buying your first home calmer and safer. Now let's talk about your credit. Your credit score is one of the most important numbers in your financial life, especially when you want to buy a home. So, what is it? A credit score is a 3-digit number that tells lenders how likely you are to pay back borrowed money. It is calculated based on your credit history, which includes your record of paying bills, the amount of debt you carry, and the length of your credit history. Lenders use this score to decide whether to approve you for a loan, and just as importantly, what interest rate they will offer you. A good score shows you are a responsible borrower. The interest rate is the cost of borrowing money. Even a small difference in your interest rate can have a massive impact on your monthly payment and the total amount you pay over the years. A higher credit score signals to lenders that you are a lower risk, so they will offer you a lower interest rate. A lower credit score suggests you are a higher risk, so they will charge you a higher interest rate to compensate for that risk. Over the course of a 30-year mortgage, a lower rate could save you tens of thousands of dollars. This is why your credit score is so powerful. Section 3. How to improve your credit. If you have checked your credit score and it is not where you want it to be, do not panic. There is so much you can do to improve it. The most important factor in your score is your payment history. Lenders want to see that you pay your bills on time, every time. So, the first and most powerful step you can take is to make sure every single one of your bills is paid on or before its due date. Credit cards, car loans, student loans. Even one late payment can have a significant negative impact. Set up automatic payments if you need to. This habit is the foundation of a strong credit score. The second biggest factor is your credit utilization ratio. This is a fancy term for how much of your available credit you are using. Example: $10,000 limit with $5,000 balance, 50% utilization. Lenders like to see this number below 30%. Pay down credit card balances to lower utilization. Focus on paying down the cards with the highest balances first. This shows lenders you can manage debt responsibly. Keep your old credit accounts open, even if you do not use them often. A longer credit history is generally better. Closing an old card can shorten history and reduce available credit, which can actually lower your score. Unless the card has a high annual fee you can't afford, keep it open. Use it for a small, recurring purchase and pay it off immediately to keep it active. Be careful opening too many new credit accounts in a short period. Every application causes a hard inquiry on your report. While 1 or 2 inquiries are not a big deal, several in a short time can make you look risky. While saving and preparing to buy a home, avoid applying for new car loans, credit cards, or other forms of debt. Keep your financial life stable and predictable. This will pay off in the long run. Section 4. Creating a home buying budget. To create a realistic budget, you need an honest look at your income and expenses. A helpful guideline is the 28-36 rule. Your housing costs should not exceed 28% of your gross monthly income, and your total debt should not exceed 36%. Remember, the amount a lender pre-approves is a maximum, not what you should borrow. Your budget is the key to long-term financial health. Section 1. The power of pre-approval. Getting pre-approved is a crucial step. It's a conditional commitment from a lender for a specific amount of money to buy a home. This tells you exactly how much you can afford, setting a realistic boundary for your search. A pre-approval is required when submitting an offer and signals to sellers that you are serious and financially ready, which can give you a strong edge in a competitive market. I recommend speaking with a few different lenders to compare offers. Section 2. Understanding your loan options. The 2 most common interest rates are fixed rate and adjustable rate. A fixed rate mortgage means your interest rate and payment stay the same, providing stability. An adjustable rate mortgage, or ARM, often starts lower, but your payment could go up or down later. There are also conventional and government-backed loans. Government-backed loans like FHA or VA often have more flexible requirements. Your lender can help you determine which you qualify for. Section 3. Finding the right real estate agent. Now that you are pre-approved, it is time to assemble your team. The most important member of your team during the home search is your real estate agent. A good agent is your advocate. A good agent is your guide. A good agent is your expert negotiator. They do so much more than just unlock doors to show you houses. They listen to your needs. They help you find properties that match your criteria. They provide invaluable insights into local market conditions. They will guide you through the entire process. Making an offer. The final closing. Choosing the right agent is one of the most important decisions you will make. So, how do you find a great agent? The best way is often through personal referrals. Ask friends, ask family, ask colleagues who recently bought a home. A recommendation from someone you trust is a wonderful starting point. You can also research agents online. Read reviews. Look at their recent sales history. Find an agent experienced with first-time homebuyers. Find an expert in the neighborhoods you want. Interview 2 or 3 agents before you decide. When you interview, look for expertise. Look for chemistry. Ask about their experience. Ask about their communication style. Ask about their strategy for finding you a home in the current market. A good agent answers clearly and confidently. They should be a great listener, paying close attention to what you say. Just as important is your personal connection. You will be spending a lot of time with this person and trusting them with a huge financial decision. You need to feel comfortable with them and confident they represent your best interests. Understand how buyer-agent commissions work now. As of August 17, 2024, seller-paid buyer-agent commissions are no longer automatic. You and your agent negotiate the fee directly. Discuss services, structure, and cost up front. Expect a written buyer representation agreement that clearly states services and the agreed fee. Even though sellers aren't required to pay buyer-agent commissions now, most still do in practice, and overall commissions haven't dropped dramatically since August 17, 2024. Buyers must sign a written agreement with their agent before touring homes, outlining compensation, improving transparency. you will likely sign a buyer-broker agreement. This document outlines your relationship and their responsibilities to you. Finding a trustworthy agent who puts your needs first is the key to a successful and less stressful home search. Now, for the exciting part, defining your dream home. Start by making 2 lists: needs and wants. Needs are your non-negotiables, the features you absolutely must have, like the number of bedrooms or a specific commute time. Wants are the nice-to-haves, like a renovated kitchen or a home office. Share this with your agent to guide the search. The goal is finding a home that meets all your needs and some of your wants. The home search can be exciting, but also overwhelming. Stay organized with a system to track homes you like. During tours, look beyond surface decor. Focus on the bones of the house, the layout and condition. The neighborhood is just as important as the house itself. Stay objective and use your needs and wants list as your guide to find a smart investment. You have found it. After searching and touring, you have walked into a house that feels like home. This is a thrilling moment. The next step is to make an offer. This is a formal, written proposal to buy the property. Your real estate agent will be your guide here, preparing the official documents for you. Making an offer is more than just naming a price. It is a comprehensive package that includes several key components. The first part is, of course, the offer price. Your agent will help you determine a fair and competitive price based on recent sales of similar homes in the area. Another critical part is the earnest money deposit, a good faith deposit. It shows the seller you're serious. The deposit is held in an escrow account until closing, typically 1% to 3% of the purchase price. If the sale goes through, it applies toward your down payment or closing costs. If you back out for a reason not covered by contingencies, you could lose it. Your offer will also include contingencies, conditions that must be met. They protect you. Home inspection contingency, financing contingency, appraisal contingency. These clauses let you back out and get your earnest money back if major issues arise or you can't get loan approval. Finally, your offer will specify other important details, like the proposed closing date, and any items you want included: refrigerator, washing machine, window treatments. Do not assume anything is included. If you want it, write it in the offer. Your agent will help you assemble a strong, professional offer that protects your interests. Once you submit your offer, the seller has a few options. They can accept your offer as it is. They can reject it completely. Or they can issue a counteroffer. A counteroffer is very common. This starts the negotiation process. The seller might counter on the price. They might also counter on the closing date. They might counter on the items included in the sale. Do not be discouraged if you receive a counteroffer. It does not mean they do not want to sell. It means they want to negotiate for better terms. This is normal. When you get a counteroffer, you and your agent will review it carefully. You have the same 3 choices the seller had. You can accept their counteroffer, you can reject it, or you can make your own counteroffer back. A skilled real estate agent is invaluable here. Your agent will advise whether the seller's requests are reasonable. They will help analyze the market and decide your next move. The goal is to find a middle ground, a fair deal for both. This can involve back and forth. Negotiation isn't just about price. If the seller is firm on price, you can negotiate other things. Ask the seller to contribute toward your closing costs. This is called a seller concession. It reduces the cash you need at closing. Negotiate the closing date to fit your schedule. Ask for a home warranty to be included. It can cover repairs to major systems and appliances for the first year. A good negotiation looks at the whole package, not just price. Stay calm and don't take it personally. This is a business transaction. Rely on your agent and your budget. Know your absolute maximum and be prepared to walk away. Better to lose an unaffordable house than stretch finances too thin. With patience and smart negotiation, you can reach a final, signed agreement. This is called being under contract, a major milestone. Once your offer is accepted and you are under contract, one of the first and most important steps is the home inspection. This is your chance to have a professional conduct, a thorough examination of the property's condition. Effective October 15, 2025, a new state regulation protects your right to a home inspection. Sellers cannot require you to waive an inspection as a condition of sale. They must give you a written disclosure of this right. You can still choose to waive an inspection, but not under pressure. Know the limitations. Inspectors perform non-invasive checks. They don't open walls or guarantee future conditions. The purpose of the inspection is to uncover any potential issues or defects that are not visible to the naked eye. You, as the buyer, are responsible for hiring and paying for the home inspector. Your real estate agent can provide a list of licensed inspectors that buyers can choose from or research online. So the final selection is the buyer's decision. I highly recommend that you attend the home inspection. This is a fantastic opportunity to learn about your potential new home in great detail. You can walk through the property with the inspector and see everything they are seeing. They will point out issues, explain how different systems in the home work, and even show you where important things like the main water shutoff valve are located. This is your chance to ask questions. A good inspector will be happy to explain their findings and give you a better understanding of the home's overall health. It is an education in your future property. After the inspection, which usually takes a few hours, the inspector will provide you with a detailed written report. This report will include photos and descriptions of everything they found: minor issues like a dripping faucet, major concerns like a foundation problem, major concerns like an old, failing roof. Read this report very carefully with your real estate agent. It is normal for an inspection report to have a long list of items. No home is perfect, not even a brand new one. The key is to understand the difference between minor, manageable repairs and serious, expensive problems that could be deal breakers. Based on the inspection report, you have a few options. If the issues are minor, you might decide to proceed with the purchase as is. If there are more significant problems, you can go back to the seller and negotiate. You could ask the seller to make the repairs before closing. Alternatively, you could ask for a credit at closing. In a worst-case scenario, if the inspection reveals major structural or safety issues that you are not comfortable with, your inspection contingency allows you to walk away from the deal and get your earnest money back. Section 4. The appraisal, confirming the home's value. While you are arranging the home inspection, your lender will be arranging another key step, the home appraisal. The appraisal is a professional opinion of the home's value. It is required by the lender. They must ensure the property is worth the loan amount. The lender wants to protect their investment. If you stopped making payments, the lender would need to sell the home to recoup their money. The appraisal confirms the house is sufficient collateral for the loan. The buyer usually pays the appraisal fee as part of closing costs. An appraiser is a licensed professional who determines value based on several factors. They will visit the home to assess its size, condition, features, and any recent upgrades. They compare the property to similar homes that recently sold in the neighborhood. These are called comparable sales, or comps. The appraiser analyzes comps and makes adjustments for differences. For example, if your home has a finished basement and the comps do not, the appraiser will adjust the value up. The final appraisal report gives a formal, defensible market value. Often it comes in at or above the purchase price and things move forward. But sometimes the appraisal comes in low. That means the home is worth less than your offer. That can create a problem for your mortgage. A lender will not approve a loan for more than the appraised value. For example, you offered $300,000. It appraises at $290,000. The lender will finance $290,000, creating a $10,000 gap. If you face a low appraisal, you have options. Your agent might challenge the appraisal if there were clear errors, or if the appraiser missed important comparable sales. You can try to renegotiate the price with the seller. The seller might agree. Other buyers with mortgages will likely face the same issue. If the seller won't lower the price, you'd need to cover the difference in cash. If none of these work, your appraisal contingency should let you cancel and get your earnest money back. Section 5. Navigating mortgage underwriting. The underwriter does a deep dive into your financial profile to give the final approval for your loan. From application to closing, it is critical you don't make any major financial changes. Don't buy a new car, open new credit cards, or change jobs. Once satisfied, the underwriter issues a clear to close, the final approval and green light for your closing. Section 1, the closing day, making it official. You have made it to the final step, the closing day. This is also known as settlement. It is the day ownership transfers from the seller to you. It is the culmination of your hard work. Before the closing table, you'll have one last chance to visit the property. This is called the final walkthrough. Do this within 24 hours of closing. Confirm the home is in the same condition you agreed to. Verify any agreed repairs are completed. Make sure appliances and systems work correctly. At least 3 business days before closing, you'll receive the Closing Disclosure, CD. The CD is a 5-page form with the final loan figures. It shows the loan terms. It shows your projected monthly payments. It shows a summary of all fees and costs. Compare the CD carefully with your original loan estimate. The numbers should be very similar. If you see significant differences, contact your lender immediately. On closing day, you'll go to a title company or attorney's office. Bring a government-issued photo ID, driver's license. Bring funds for closing costs. Bring your down payment. Funds must be a cashier's check or a wire transfer. Personal checks aren't accepted. The CD will list the exact amount you need. Confirm wire transfer instructions with the title company by phone to avoid fraud. The closing is mostly signing documents. You'll sign a mountain of paperwork. Sign the mortgage note, your promise to repay. Sign the deed of trust, the loan's collateral. The closing agent will walk you through each document. Ask questions if anything is unclear. Once papers are signed and money transferred, the loan funds. The title is recorded in your name. You receive the keys. Congratulations, the house is now yours. Holding the keys to your new home is an incredible feeling. But the work isn't over. First, transfer utilities into your name and change the locks. Next, create a home maintenance schedule for tasks like cleaning gutters and changing filters. Finally, revisit your budget. Plan to set aside 1 to 3% of your home's value each year for maintenance and repairs. Enjoy this new chapter. Massachusetts first-time homebuyer resources. Save these links. Mass Housing offers affordable mortgages and down payment help, up to about $30,000 for eligible buyers. 1 mortgage, 3% down, low rate, and no private mortgage insurance for qualified buyers. City of Boston grants can cover around 3 to 5% toward your purchase. Education and pre-approval required. Massachusetts Affordable Housing Alliance provides classes, counseling, and matched savings. Great for first-generation buyers. Massachusetts has HUD-approved counseling statewide. NeighborWorks Housing Solutions also offers certificate courses. Many cities offer local assistance. Check Springfield, Worcester, Lowell, Quincy, Somerville, Lynn, Medford, and Chelsea. National options, FHA for lower down payments, VA zero down for eligible veterans, and USDA for rural buyers. Before applying, complete a homebuyer education course, get pre-approved, and review income and asset limits for each program. Thanks for watching. Please leave your feedback in the comments and tell me what content you would like to see next.